How to find the best stocks for cash-secured puts. If you are curious about how to find the best stocks for cash-secured puts, you are in the right place. This strategy can be a great way to generate income while potentially acquiring stocks at a lower price. Let's break down the steps to help you identify the right stocks for this approach. First, consider your stock selection criteria. Look for stocks that have high liquidity. This means they should have a high trading volume and tight bid-ask spreads. This ensures you can enter and exit your positions without much hassle. Next, examine the fundamentals of the companies you are interested in. Focus on companies with strong financials, stable earnings, and a history of consistent growth. Avoid stocks that carry excessive debt or have volatile earnings, as these can increase your risk. Volatility is another important factor. You want to aim for moderate volatility. While high volatility can provide higher premiums, it also comes with increased risk. On the other hand, low volatility might not give you enough premium to make the strategy worthwhile. Also, consider the dividend yield. While not necessary, stocks that pay steady dividends can add another layer of income to your strategy. Now, let's talk about your market outlook and how it fits with your strategy. Cash-secured puts are most effective when you have a neutral to bullish outlook on the stock. You should be comfortable owning the stock at the strike price you choose. When selecting stocks, ensure you are willing to own them long-term if assigned. This means you should only use this strategy on stocks you genuinely want to hold. Next, use technical analysis to identify price levels. Look for support levels where the stock has historically found buyers. Selling puts at or below these levels can increase your chances of a favorable entry point. Pay attention to recent price action as well. Avoid stocks that are in a steep downtrend. Instead, focus on stocks that have pulled back but show signs of stability or are near support levels. Now, let's discuss option metrics. Compare the premium amount you receive for selling the put to the cash required to secure the position. You want higher premiums relative to the risk you are taking. Implied volatility is another metric to consider. Higher implied volatility means higher premiums, but it also indicates higher risk. Make sure to assess your own risk tolerance before proceeding. When choosing a strike price and expiration date, select a strike price you are comfortable buying the stock at. The expiration date should align with your outlook and income goals. Risk management is key in this strategy. Understand that your maximum loss is the strike price minus the premium received, multiplied by 100 shares. Be prepared for assignment and only set aside cash you can afford to tie up. Let's look at a practical example. Suppose you want to buy shares of company XYZ, which is currently trading at $50. You could sell a put option with a $45 strike price and receive a $2 premium. If the stock stays above $45, you keep the $200 premium. If it drops below $45, you buy the stock at $45, but your effective cost is actually $43 per share after accounting for the premium. If you are not assigned, you can repeat this process with the same or a different stock, adjusting your strike prices and expiration dates as needed. In summary, to find the best stocks for cash-secured puts, select stocks you want to own, choose liquid and fundamentally sound companies, and sell puts at support levels or below the current price. Monitor implied volatility and premium levels, and be prepared for assignment while managing your risk. By following these steps, you can effectively identify stocks that align with your options trading goals.